Hello and welcome to PRI's webinar on the 2019 Climate Risk Indicators. My name is Edward Baker. I'm part of the climate change team at PRI, and I'll be your moderator for the next 40 minutes. Thank you for taking time to join us this afternoon, or whatever time it is where you're calling in from. 2019 is the second year that PRI has included TCFD-based indicators in its reporting framework. And during the course of this webinar, we'd like to address three key questions: why, what, and how of signatory climate reporting. The why being that despite this, the climate risk indicators being a voluntary module, might investors choose to respond to it? The what being what were the feedback and revisions since the pilot year in 2018? And the how in terms of how have some PRI signatories been implementing climate risk disclosure frameworks? Joining me to take us through this webinar is my colleague from the RNA team, Adele Irving. And the agenda for this webinar is on the screen in front of you. We'll start in a moment with a bit of background on climate and TCFD, before handing over to Adele to provide that update on the new indicators for 2019, and then a few investor examples, and then Q&A. Just a couple of housekeeping items. If you'd like to ask a question, you can certainly do so by clicking on the Q&A tab in the bottom right of your screen, and we will take questions as they come, or we may stack them together towards the end of the webinar. A recording of this webinar will be sent to everyone who has registered, and this should be out by the end of this week. So then, let's get underway. And perhaps first, we can take a start by just a little bit of an update as to who PRI represents. It's notable on this screen here is the number of signatories that PRI now has. It's over 2,200, which represents a net increase of 350 on this time last year. And this provides an illustration with who in the investor universe might be thinking about issues like climate-related risk. Now, I don't want to dwell too long on some of the background with this audience. I'm sure you're very familiar with these types of slides, but it's worth reminding ourselves what are the reasons that climate change is important for investors. And in short, it's because they could have capital at risk. And these come from two main sources: physical risk, that is, what we are doing to the planet and what it may do in response to us, and transition risk, whereby the world could shift underneath your investment as a result of climate, of policy and technology change. So climate is a slow-moving problem relative to other risks that investors face, but a key issue is of system inertia. The climate system is characterized by a delay and a dose and response. And there is a multi-decadal lag between emissions that we put out today and their impact on the economy and society. Thus, the worst impacts of climate change won't hit in 2019, but we are, however, on track for serious long-term trouble down the road. So the image on the left of the slide illustrates that whilst we could be in control of the problem now, there could come a point where we won't be. That is, that the inertia builds up in the system to the point where beyond certain planetary thresholds, and there is a risk of cascading feedbacks which could lock the Earth into a hothouse trajectory, as the slide illustrates. So to avoid this, there needs to be deliberate action, and this is the value of the Paris Agreement, a coordinated and orderly transition. So shown on the graph on the right is a series of potential pathways. And in the solid colors, in the yellow, green, and blue, those show the pathways which are sort of consistent with the Paris Agreement. So the challenge for financial market institutions is that this delayed dose and response characteristic translates into what Mark Carney termed the tragedy of horizons. That is, the full impact of climate change are far beyond the typical investment cycle, the tenure of CEOs, or even the business cycle itself. Yet action today determines the risk we face in the future. But despite this, financial markets do have the potential to improve our prospects of tackling climate change, but only if we make climate risk and opportunities more transparent. And this was the central thrust of Mark Carney's landmark speech 2.5 years ago. This, of course, led to the establishment of a task force for climate-related disclosures. And now these recommendations, I won't go into great detail. I hope that they will be familiar to you. But broadly speaking, it is a framework for translating information about climate change into financial metrics. Whilst it is a disclosure framework, as one investor asset owner based in Australia recently said to us, to report, you also have to do something. Hence, the disclosure part of the TCFD is arguably only the final 10% of the work. And so we want to touch a little bit more on what types of things we see investors doing. So before I hand over to Adele, 3 brief takeaways from the first year of implementation of TCFD. And this is really drawn on a series of climate risk forums that PRI has run in over 10 cities, as well as our other engagements. I think the first thing to say is 18 months on, it's clear that the recommendations have been influential. And the lines of evidence for this come in a number of sources. One is the actions that signatories, people like yourselves, are taking. And so if you look at the volume of responses to the climate risk indicators that were introduced a year ago, even ourselves in PRI were quite surprised by the amount of responses we received. Almost 500 investors chose to report to us by the end of March last year. So that's an indication of who might be thinking about these types of issues and also prepared to report to bodies like the PRI. So it's not only what investors are doing, but it's also growing interest from regulators. Just last week, the European Commission published a consultation document which integrates TCFD into the non-financial reporting directive. And so that will be relevant to around 7,000 companies across the European Union. In the UK, we've seen more action from the Department of Work and Pensions, integration of ESG into the investment sustainable principles for pensions regulation, as well as from the Bank of England. Moving further afield in China, the authorities there are committed to introducing a disclosure framework by next year, and they're also taking TCFD as a form of reference. Perhaps heading over to North America now, we can see that in Canada they've set up an expert group on sustainable finance, which again looks very closely at TCFD and the relevance to that market. In the US, there has been state legislation in California which has required 2 of the largest asset owners in that state to report on a 3-year basis. And there's also the network of central bankers and supervisors. So this is set up by the Bank of France, the Central Bank of Netherlands, and the Bank of England, and now includes over 20 central banks and supervisors worldwide. They will be producing a report in April this year, and I think that will be something to watch in terms of shifting attitudes of financial regulators. So that's the response to TCFD. I think the second takeaway is around how it's being implemented. We see a multi-year implementation approach. And this is indicated on this slide here. So the first slide, so perhaps in the initial year, organizations can assess the business case, what the commercial reasons are for implementing this framework. Can workshop the issue, establish internal process, and then building on this in year 2 can be incorporated within risk management, identify useful metrics, and again in year 3, adding in complexity, including integration of scenario analysis and tilting towards low carbon solutions. So that's an ideal view, you might say. In some ways, perhaps it's too neat, and in fact, some investors may take the reverse approach and start with a more complex analysis to help win over and convince colleagues that a consideration of the recommendations is needed. And finally, in terms of the types of responses we're seeing from investors, the Bank of England recently published, in its recent banking review, they published identifying 3 types of responses from the banking sector: strategic, responsible, and responsive. So strategic being where there is board-level approval for multi-year implementation plans on climate risk, integration within risk management, and there is a systematic approach towards supporting the orderly low-carbon transition. Responsible in terms of dedicated internal resource on II, which is covering climate, but the disclosure is perhaps not yet public, or there isn't the degree of organizational support in the earlier category. And then responsive, which is acknowledging. I think to this you can also add a 4th category, which is not yet responding. And I think this framing is also relevant to the responses that we see from the investment community. So then, just some quick conclusions from this opening section on your screen here. TCFD is a risk management framework, and PRI, we are trying to support investors who might be interested in implementing this through our practical guides, tools, engagement platforms, and the reporting framework, which provides an opportunity for investors to try TCFD. So I'm going to hand over to my colleague, Adele, who's going to take you through the next stage of the webinar.
Thank you, Ed. Okay, so just to start with stating rather matter-of-factly that the 2019 climate-related indicators are based on the TCFD recommendations and further have actually been approved by the TCFD Secretariat. This is in light of the updates that were made since the 2018 pilot. Now, in terms of the update, just a quick overview to start with. So we have introduced a number of new indicators, specifically new indicators on scenario analysis, and then also on how an organization may approach in terms of an overarching or overall approach to climate. The rationale for including these indicators is largely in response to signatories having indicated that climate is the #1 ESG issue, and so the inclusion of these indicators is in line with the greater effort to understand and provide further analysis, guidance and support to our signatories. Further, in response to the 2018 pilot, drawing on the learning experience that it was, and also signatory feedback, there have been multiple indicators that have been merged, and there have also been a number of format changes which have been made to improve or to ease reporting in general. Now, looking at the indicators themselves, At a high level, the indicators linked to the strategy element of the TCFD recommendations have been updated significantly. So in terms of the actual indicator codes, that would be SG1CC and SG13CC. The indicators linked to risk management, governance, and metrics and targets element of the TCFD have undergone only minor changes. Now, if we actually start looking at the indicators themselves, so focusing firstly on SG1CC, so in addition to the 2018 indicators that already address the strategy component of the recommendations, we have in 2019 introduced new indicators that look into the organisation's overall approach to climate, as I mentioned. As an example, we ask whether there is an organisation-wide strategy in place to manage climate, and where there is not one in place, how and over what time frame this may be implemented. Moving on to SG7CC, this indicator continues to address governance and is largely unchanged. However, with the exception of a single new indicator which will only be applicable to signatories or to reporters who hold externally managed assets. And this particular indicator will ask whether you engage with these managers on TCFD and its implementation. Moving on to SG13CC. For this particular indicator, we've extended the scope and depth of these indicators, which relate specifically to scenario analysis. With the release of the PACTA tool last year, along with a lot of the findings and the feedback from the 2018 reported data, we understand that signatories have asked for greater assistance on this subject, so we are now working on identifying leading signatories in this area to enable learning and understand best practices. Finally, SG14CC. This indicator has not undergone major changes. A number of the indicators have been merged or removed, and there have also been some formatting changes, in particular to a number of the tables that are within this indicator. But by and large, the risk management and metrics and targets linked indicators have remained the same. Now, you should be able to see on your screen the TCFD recommendations index table. For those that reported in 2018, I would imagine that you would recognise this table, but for the benefit of those who didn't report against the climate indicators in 2018, this particular table shows all the TCFD recommendations and then also the relevant PRI indicator linked to that particular recommendation. To highlight, in 2019, this particular table has been updated. So as you are reporting against the climate indicators, I would suggest referring back to this table as you go along. Further to that, when it comes to actually reporting, it is also important to ensure that you are reading the explanatory notes tab within the reporting tool. In many of these cases, or in many of these indicator cases, this will provide you with an outline of the response required in order to fulfill the full criteria of the TCFD recommendations. Now moving on to the slightly more practical side of the climate change reporting. As in 2018, the climate indicators are once again voluntary to report on, and this also goes for each individual climate indicator. So where you may decide to report on one climate indicator, you're not necessarily obliged to answer the next. Now, in terms of the disclosure, this is again optional, so reporting public or privately can be indicated when opting into climate reporting. Now, in terms of how you would go about opting into climate change, for the benefit of those that haven't done it yet, When you log into the reporting tool, you'll be able to, and you're on the overview page, you'll be able to see a select tags button just above the organizational overview module. If you select this button, it will take you to another page where you're able to opt into climate change reporting and also select your disclosure setting. And once that's saved, you will have effectively opted into climate change reporting. To confirm that, you would just need to go back to the overview page, and from that point forward, you should be able to see the climate action SDG icon above the organizational overview module, again, like you see on the screen. Now, moving on to the outputs of climate reporting. There are three main outputs, the first being a climate transparency report. This is a report that includes all climate-related indicators. It comes in a Word version, which allows you to easily copy and paste information from this report into other financial filings that you may wish to do so. The second output is a public and private transparency report. This is the same report that you would get in the main framework, and it is an accumulation of all the indicators that you've reported on throughout the entire reporting framework. Now, if you do opt into reporting on climate, those reports will include your climate change or climate-related indicators and their responses, of course. The third and final output is the Data Portal Analysis and Snapshot Report. Now, in 2018, we did release a Climate Snapshot Report, which outlined key findings from the 2018 reported data. We will be doing the same again in 2019. So first of all, if you haven't actually had a look at the 2018 snapshot report, I'd recommend you to do so. There's a lot of information there, and it's very accessible. Now, moving on to reporting more generally, just a few things to highlight. So the reporting tool is now open, and the reporting deadline is the 1st of April. All reporting contacts should have received an email from the PRI on the 7th of January with all the instructions on how you would start reporting. As the reporting tool is a smart program, you are able to save responses and then also return later. You're also able to see and replace previous saved versions of indicators. Of your previously saved versions of your responses to indicators. Therefore, you are free, and we would encourage signatories to start reporting even when not all the data may have been collected yet. This is particularly important as well, given that we are expecting this year 2,186 signatories to report, and therefore, should you have any questions, we are much more likely to be able to get back to you with an answer a lot sooner if these are raised earlier in the reporting cycle. Now, briefly, there is a lot of reporting-related support on the PRI website. This includes frequently asked questions, a short how to report recording, a number of resource documents, particularly pertaining to climate, and there is also additionally an upcoming webinar on the 5th of February that will be on the 2019 reporting cycle, which will discuss the framework updates in more detail and provide also an overview and a Q&A session on the entire framework. And you'll be able to see links on the slide there should you wish to register. And I'll pass you back to Ed.
Thank you very much, Adele. I think some key takeaways from me from what we just heard there was an overview of the changes that have been made in 2019, some key dates for the diary in terms of PRI reporting framework, and also where you can go for further guidance. I think just to reinforce Adele's point, when you download the climate indicators for 2019, under each indicator there is at least a page worth of guidance. And in addition to that, and some of the resources that are also available, we are consolidating a list of reports, webinars, previous signatory responses to last year's indicators, and also an overview of the list of climate scenarios that are part of the indicators. And so that is going to be online within the next few days, and a link to this consolidated page of resources relevant to these indicators will be circulated with a recording of this webinar. So we've heard a bit about the background, we've heard about what the changes are, and just take a quick look at some of the examples from your peers as to how they're approaching climate-related risks. I think one that stands out, particularly in the North American market, is CalSTRS. So this is an asset owner that has executive level support for addressing and further understanding climate-related risks and opportunities. The CIO has a direct reporting line to him on this issue, but it's not just this person. It's also been discussed at the board level and the investment committee. So an interesting feature at CalSTRS is that they have a cross-cutting green team, which is made up of different members from across the organization, and they work together to produce an annual report, which is reported and published. There is a commitment to engage over 100 companies and external managers on this issue. The organization has participated in 2 of the Mercer studies in 2012 and 2015. And I think it is an example of an asset owner that has clarified responsibilities in terms of who within the organization is gripping this issue, articulated the risks, and has a system in place for board level oversight. So that's one asset owner example. Another on the screen here is from the UK, and this is the Environment Agency Pension Fund. So this investor has also a long track record in this area. First started in 2005 with some clean energy investments. They have a dedicated chief responsibility officer and have put climate change as part of their risk register. So the image on the screen here is from their 2015 climate policy report. And a key finding from that report was that for EAPF to implement the strategy that they're setting out in their policy, they were coming up against a challenge of a lack of data, visibility in terms of how the companies and the managers that were managing their investments are approaching this issue. So to deliver this strategy, they needed better data. Hence, the organization has been a very strong advocate for TCFD. They have already published 2 reports on this, and again have participated in the Mercer study, where they found that some of the scenario analysis was practical in terms of helping to identify sensitive asset classes, notably forestry and in emerging markets, which were used to inform future allocation decisions by the investment committee. So following all this work, they have identified 3 targets for 2020 in terms of how they invest, in terms of how they decarbonize their portfolio, and also how they engage with companies and managers and work across the industry. So EAPF is now part of the pension pool Brunel, which includes 9 other UK local government pension funds, and they are working through an implementation plan for this larger organisation. So that really takes us to the end of our sort of structured time, having gone over the background, having provided an overview of some of the revisions to the indicators, and discussed briefly a few investor examples of how this is being put into practice in the real world. If you have any questions you'd like to ask and haven't yet done so, please feel free to use the facility, the box in the bottom right of your screen. Just have a few questions here for Adele. I think the first one which comes to mind is perhaps if you could elaborate a little bit more on an indicator that has changed this year, so what it now says vis-a-vis what it said last year.
Sure. So I will draw again on the scenario analysis indicators. So as an example, in 2018, we asked if you consider scenario analysis based on a 2-degree or lower scenario, whereas in 2019, this has been revised to please indicate if a range of climate scenarios are used, and then if so, a follow-up question is what scenarios have been used. Now, in terms of the reasoning for this change, it was largely in response to signatory interest on this topic, and as well due to some key developments in the last few months. So this indicator has been updated to reflect this.
Thanks very much, Adele. I think some of the other revisions to the indicators also reflect some of the early things that we discussed around this question of time horizons. And so one of the questions last year that we had where signatories perhaps found it difficult to respond to was describe what a short-term risk, a mid-term risk, long-term risk. So how has that question evolved for this year?
Yes, so in terms of the feedback that we received, we certainly got a number of signatories indicating they had quite some trouble responding to that particular indicator. This is a good example of where indicators have been merged. So now those elements of describing what you would consider short, medium, and long-term risks and opportunities have now been integrated into indicators within the SG01CC indicators. And for the most part, it's a further example of why the explanatory notes tab is particularly important, because it'll make mention of the fact that you should, when responding, include examples, if you can, for those 3 timeframes.
Got it. So the question is more now in context rather than sort of as a standalone. So hopefully that will make it a little clearer. Another question here is there any format to follow in the reporting or some guidance to learn for companies to report on the indicators based on the TCFD recommendations?
So in terms of a format to follow when you go about reporting on climate change and the indicators that we've released, by and large, I would say there isn't necessarily one format that we've put forward. Rather, all these indicators are voluntary, very specifically, so that we can understand, first of all, where signatories find it easy to respond to some, and it also provides areas and elements for signatories to also indicate that it might be difficult to respond to a certain indicator, or rather that the practices and activities that it's requesting have not yet been developed. So in terms of the format, it would be very much so just based on whether you feel comfortable, whether you're prepared to be able to respond to those indicators. In terms of that, more practically speaking, these indicators are also have also been created in the same way that much of the main framework has been, so that where you may indicate that you do follow a particular strategy, there may be follow-up questions where you indicate that there aren't. Then those questions will remain closed. So by and large, there's built-in logic.
Great. So I think is it worth saying that the format to respond to these indicators it's sort of text or it's text box.
Yes.
Is that right?
Sorry. So in terms of the actual format, I suppose yes. There are a combination of tick box or closed indicators, and there's also a number of text box indicators where you can actually provide more context. And then further, like in the main framework as well, there's additional information text boxes which would allow you to provide further context if you feel it necessary, particularly in cases where an indicator might be just a tick box.
And just in terms of the responses, last year there was the option to make your submissions private. So you didn't have to make it public so that other signatories or when PRI published some sort of cumulative data, but it wasn't included in that. Is that option, that private response option, still available in 2019?
That's right. So when you opt into climate change reporting, you do have the option to disclose privately. If you do select private disclosure, that information that you report will be kept entirely private. It will only be made available on the private transparency reports, which the signatory will only have access to. No one else will be able to see that. Further, the climate transparency report, which will be the accumulation of all the climate indicators, will be private as well.
Right. Thanks for that clarification. I think lastly as well, so this year and last year, these were voluntary to respond to, but what can you tell us about the future of these indicators? Are they going to become mandatory in 2020?
So the reporting and assessment team reviews the framework on an annual basis. So in terms of decisions to be made regarding the 2020 framework and specifically the climate indicators have not yet been made. In saying that, one thing I can clarify, it's normal practice within the reporting and assessment team to normally make voluntary indicators mandatory first before we start assessing. So this will apply to climate as well. So for the most part, we can expect that the climate indicators may one day become mandatory well before they're assessed.
Okay, thank you for that clarification. So I think really we're at our allotted time here, and it's just left for me to thank Adele and all of you for joining us on this webinar. As I said, a recording and some of the material that we have discussed will be circulated in due course. And should you have any further questions, please don't hesitate to get in touch. Many thanks.